Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS. ORATS is an options analytics platform built on over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to show you how to use the new optimizer to enhance over 300 million options backtests. Matt, do you want to share your screen and get us started?
Sure. Yeah, thanks, Tyler. It's quite a feat that we've done here. So in general, we've pre-canned all these strategies, and then we have gone through them, or I've gone through a lot of them, and tried to find the ones that will optimize the best, meaning use our indicators to find optimal entry and exit points. And then we've provided them as curated strategies. So our goal is to help our clients get to good strategies more quickly, show them examples, and then still provide the ability to customize that. Is that an okay intro, Tyler?
Yeah, there's a lot packed into that. So that's what we're going to be going over today on the show, that whole process.
Yeah. So kind of the final answer is this. So I have these strategies that I've saved. They have Sharpe ratios that I look at. They have p-values that I look at. So those are what we're going to be trying to either find or optimize or whatever. And right now it's the trade ideas tab brings the actual trades that meet all the criteria. So we're going to be choosing backtests that have some filters on it, some criteria filters, and we're going to be then optimizing on these backtests. And then when we save that to my strategies or my backtest, and we go to the trade ideas, it will only bring in these trades that have met all of the criteria. So for example, I could pick, let's pick the top one. It's a short, it's a short call spread. So if I click on this it will go get the original backtest that I started with. So, with the market going up so much since 2007, it's hard to find strategies that look good from a short perspective, i.e. from, like a short call spread, short deltas, or long put spreads or whatever. So this is PayPal, a short call spread. Believe it or not, even though it's losing money, the performance metrics, it's down 34% on a margin level. This is one of the better ones of the short call spreads. And so then what we do is we take this graph and we say, well, there are times when it did pretty well. Can we pick those times out using our optimizer? So you would click on this optimizer, and then it goes to the PayPal short call spread. So it picks up the optimizer. This is the same payoff picture that we saw earlier. And then what we do is we say, well, let's, you could change the strategy, but we don't want to. We want to add a data set. So what this data set will do is it will go calculate if you would have done, it looks at these all these indicators. Okay, so I know I'm scrolling fast through it just to show you the number of them, but so we put what we think are the most popular or best ones up top. The top one right now is IV ETF ratio. What that is how is the implied volatility of PayPal versus its best ETF. Maybe it's the XLK, but I'd have to look. And then, it will say it'll do a smooth moving average. And then, is it best when it's above or below? We use short-term and long-term. So You'll see long-term and short-term. Go ahead, Tyler.
I just want to slow down a bit here because I think this is where users might get a little hung up. So up to this point, right, we've just selected a options backtest, and we've, with some DTE, with some deltas, and we've tracked the performance, and that's that green line, right? And there's the stock chart in the background. So hopefully that makes sense up to this point. So it's what we're trying to do in the the goal of the optimizer at a high level is to apply ORATS proprietary indicators and make them apply to the backtest in a statistically significant way such that we improve the average percent per day of the backtest. And I say average percent per day because that's the stat there on the right side in step 3. At the top, it says stats average percent per day. That's sort of the goal. What we're doing is we're applying these ORATS indicators and trying to improve the average percent per day. Matt, do you want to talk about what the average percent per day is? Like what's the value right now, and then what are we trying to get it to?
Yeah, so as we saw before, this strategy loses 1.17% per annum annualized return. Per day, that works out to 0.005% per day. So the reason that we choose percent per day is this is often trading every day or calculating that every day. And what we're going to do is we're going to cut that down. We're going to say, well, we want to only trade on the good times. And, are there rational indicators that will allow us to determine that without overfitting? So that's the next problem. I mean, you could say, well, look at, if we would have just got in here and got out here, got in, but you have to be very careful not to do that. And there's a statistically significant way to do that. It's called using a p-value. Tyler, is that what you're looking for?
Yeah, that was a good overview of that. So hopefully that all makes sense up to this point, and we can move on to the add data set step, which is the kind of step 2 if you look at that top menu bar there. And that's what you clicked on before. So there's a lot packed in here as well. So this is a list of all of the ORATS proprietary indicators that we have available for you to enhance this backtest with. And you have the description of the indicator on the right, the indicator name in bold there in the center. And then there's 3 columns on the left. So let's go over each one. How does that sound, Matt?
Yeah, that sounds great. So I've sorted this by p-value. You could also sort it by average day, but I think the p-value is more important because we want to try to find out not only what is a good indicator that improves our returns, but we want to make sure it's statistically significant, not overfit. And I don't know what the detail is, but you might want to get into a brief conversation about that p-value, Tyler.
Yeah. So yeah, just to clarify, this p-value it's pre-calculated. So we actually calculate these values on the left, these metrics, before you add them to the graph. But they're going to be the same once you add them as they are in this pop-up here. Most software tools don't do that, I feel like, so that's important to clear up. So the p-value is it measures the likelihood that this indicator reaches the average percent per day metric there on the left by chance. So if this indicator improves the backtest up to that value on the left, that has for the one you're highlighting, let's look at the IV ETF ratio, the top one. It's got a 24% chance of that happening by chance. And the reason this is important is because there are millions of indicators you can use, and it can be something completely random or ridiculous. But if by chance it could improve the backtest, how do you know that it's by chance? And so there's a statistical method to do this called like p-value simulations. And what we do is we run a variant of the Monte Carlo simulation method on the modified versus the original return stream. And that creates this p-value, which then we can use to decide the statistical likelihood of it occurring by chance.
Yeah, that's great. It's difficult. We've read books on it together, Tyler, and we're excited to offer this because it does give us some statistical significance that we're overfitting or not overfitting, so that it's very useful. So what we do is we sort each section. So like this is the section. It comes out during this, and so we have ratios that we like. So this ratio is one of my favorites because it uses our forecast, but it doesn't really improve the daily return. If you recall, the daily return is negative 0.005 anyway. So even though this would cut things down, it doesn't really improve the results. You can start to see if it's in green, that means it does improve the results. And this improves the results quite a bit. Unfortunately, the implied R-squared, not one of the my favorite indicators, just because it's not as meaningful. It's just measuring the goodness of fit. If you were to overlay an implied volatility with the X earnings volatility. So I mean, I guess it's okay, but it's not that great. So what I like to do is I go, well, I know this it seems a little subjective, but you'll learn to see like which ones are more meaningful, and not just by chance, like because this implied R-squared tend to go move in a direction for many days, and so it's not as and then it can be just fit to when this particular test has done well. So you have to be careful with that.
Yeah, that's a good point, Matt. I want to go over the leftmost column really quick. So it's called best technical average percent per day, and what that means is we're already telling you what it's going to show you when you add this to the chart, or we're telling you what the modified return stream is going to look like in terms of the best average percent per day. And what we're doing is we're not just adding the indicator and saying if it's greater than 1, we enter. If it's less than 1, we exit. Like that, it's not a basic implementation. What we do is we do we test different simple moving average levels of that indicator. So as probably most of you guys know, it's not as simple as just saying less than or greater than a value, because all of these ORATS indicators vary wildly in their values, right? Like slope is a different value than the forecast, or different value than the historical volatility, which is different than the contango. So we have to use a relative metric, and simple moving average is one of the most tried and true relative metrics out there, right? There are other ones like RSI, average true range. You can measure even the slope of the indicator, but the simple moving average, we think is a very tried and true method, and it's one that's hard to, I guess, overfit, because you're just comparing different periods, and we're only doing a short, medium, and long. We're only testing a short-term, medium-term, and long-term simple moving average. Did that make sense, Matt?
Yeah, that was good, and there's a lot going on. So, and we have used these other technical indicators. Now it's going to get a little. This is kind of advanced right now, so if your already head is spinning, don't feel free to just ignore this for a second. But so we do look at simple moving averages, and you would want to pick the best one, but we do calculate RSIs, we do calculate commodity channels, which is just another technical indicator, and Bollinger Bands. But we found that the SMA is generally the better one, and so that's why we present this one.
I think it also has the least chance of negatively impacting the p-value, just because it's just such a tried and true indicator.
Right. And so you could see that, okay, so then what we do is, so I've clicked on one. And what we do is we say, well, when this indicator, happens to be the vol of the volatility, when this indicator, goes up or down, so it wants the vol of the volatility to be, somewhat low, because it's green, meaning we're in the trade. And so it wants to, trade that only when, that's what it found. It tests low and high, but and then it presents the best one. So, you could tell that, like, right over here, it crossed over, so you could kind of zoom in on it. For example, lately it's fallen. And so, that's when it wants to get in. It's below here, and that's when it wants to get in. So
that's interesting, that spike right there. And I wonder if you can see that.
Well, that's when the
August
fell.
Oh no, yeah. Well, in the one before, the August 22nd one, the gap. If you go back a year.
Oh,
that one. So the stock went up pretty rapidly there, and the vol increased a lot, and that's when we got out
of it, because you would have lost all that money here. So what a neat thing to do is you could minimize this and then kind of say, okay, well, the green one is what we're going to get, and the gold one or the orange one is what if you're in all the time. So this is saying, hey, wait a second, when the vol starts spiking, that's when you actually want a low vol to when to get into this particular trade.
Yeah, very interesting.
Yeah, I mean, sometimes you get out when you're not supposed to, but PayPal is one of those that it gets volatile on the upside too. So that's probably why it's a short call spread.
And so a lot of you might be thinking, like, well, like, this could be completely random, right? Like the vol, what the heck is that, right? But the p-value in this case is 0.07. It's kind of hovering around there. So that means that this indicator only has a 7% chance of impacting the strategy positively in a random way. So what it's saying is it's pretty likely that it's an actually good indicator.
Yeah. And you want to find ones that make sense too. Like, why is this making sense? Well, when it gets very volatile, that's often happens, in PayPal on the upside, and this is a short call spread, short delta. So that's when you don't want to be in it. You want to be in this when the vol is falling, and this call spread, the short call spread, is pretty far out of the money. 16 deltas out of 50 days. That's far out of the money. So you don't want anything crazy to happen, like any spikes up or down. So that's when this strategy works the best, Tyler.
Yeah, very interesting.
Yeah. All right. So, like, what we've done, let's just review a little bit. We've found a back test. We've clicked on optimize. We've come to here. We've downloaded the data sets, and now we could even add another one. So we have one. While we're hot, let's just add another one. So again, I like to sort it on p-value and see the improvement. So this is using price. ATMIV is at the time that we calculated the implied volatility, which is what you want to use. Here's one that's 3 that is at that increases it quite a bit to 9. The problem with using more and more is that we're going to be losing days, meaning right now it's about 50% of the days when we click on one of these. So I'm going to use, I like this one, ETF slope ratio. So a slope is important for on this particular trade because it's so far out of the money that slope will affect it. If you don't know what that means, then you could check out some of our other shows. But it's the put call slope. So this is this is one that's very far out of the money and pretty wide. So the slope is going to affect it. So I'm happy using this one. And so now we have a lower p-value of 3. We have A positive expected return, 0.009. It's very low because, let's face it, the market's been rallying. So it's often hard to find a good short call spread to add to your portfolio. So what you want to do then, we could maybe start to talk about this a little bit, Tyler. When you're implementing these trades, you don't want to be just like, just naked long everything. You want to try to find some decent strategies that will mitigate some of the risk that you have on from your deltas from being long. Like if you're short a put spread, that those look a lot better from a backtesting perspective, because again, we've been in a bull market and we're backtesting. And so it's good sometimes to have, this is a short call spread, so this is short premium. And there are some good long premium trades that you might find sometimes too, but they won't look as good, but you still can add these to your portfolio and have your overall portfolio benefit from having some of these trades. Does that make sense, Tyler?
Yeah, I mean, what you're getting into is, we're working on that too, making it more, working on improving the way for you to test these different strategies. And, we have a paper trader you guys can test these things in and kind of make those adjustments Matt's talking about.
Yeah. So now what we do, we save this, right, Tyler?
Yep, saving it. And then, you're going to go to the trade ideas or to the saved.
Downloading it downloads the entry and exit days, and then so you could see what those are. And we have a backtester that works on entry and exit days, so you can kind of prove it to yourself. But that's what that means. So we've saved it. So the 50 DTE and PayPal. So then it's in my save backtests, and then so here's PayPal, and then I could just say short call spread. So we have a few already. This is the one that we just did. Is that it? No, that's not.
No, the August 19th on that one.
Yeah, this is it. So this is the one that we just did, and it's showing that the scan is not meeting the criteria right now. That's why it's in red. If it weren't, you could then click on it and go, see, even though these short call spreads are meeting the criteria, and you could set your rankings. I could use some forecasts. And so these would be some of the tests that they'd want you to trade in this particular strategy, but it's not meeting the criteria right now. So, so this wouldn't trigger. Yeah,
that's what you did there is really cool. I mean, you took an optimized test, and then you saw clearly. I mean, you have looks like hundreds of tests in here.
Yeah,
hundreds of optimized strategies. You can see clearly there on the left, green or red. It tells you if you're in the trade or you're not in the trade. And even still run a scan. So. And
sometimes, Tyler, even if these are green, we're not testing the actual backtest spread yield. So a spread yield is something where I'm going to try to figure out the best way to say this. No, that's not the best way. I'm going to try to find where a spread yield is used. So, spread yield. Let's go to the backtester. So if you look at this, this is the spread divided by stock. We call it the spread yield. And if it's high, that means so we could look at this backtest. Something's going on with my backtest right now. And it will set up the option scanner to only find trades that are above or meeting the spread yield in a stock. So what I want to show is that, so for my strategies, out of all those that are green, Tyler, these are the ones that are meeting all the criteria. So only this amount. So it's a small amount that gets through all the criteria, which is cool because that's what you want. We're able to, instead of you having to go click around like I was doing, and it not finding it and giving those messages, these are already doing it. So these are the trades that would make it all the way through. Actually, there's another paper.
It's hard to overstate just how much is going on here, right? Because we've ran all these back tests for you. That on its own, running a back test, and getting all the metrics for it, that on its own is a difficult task, right? But we've made it easy with the back test finder. And then you take a favorite one from there, and then you optimize it with all of our indicators, which again are also, would take a long time to calculate. And then you have this, and then you pool all them together, all your strategies. You have 100 strategies together, and then this is the final piece where it runs. It's actually running the option scans for you, and checking all of the backtest entry criteria for you, and then finding the best trade based on your weighted rankings.
And it's bringing all this data in. So this is what I like to look at, Tyler. So you have a probability of profit calculation, which is difficult. And it's about 90. So that's 1 in 10, right? And your risk is about the same, 1 in 10. So so these usually match up that way. If you have and what you want to find is a high probability, and so this one would probably be the least risky. This kind of looks like the better one from a risk return versus probability of profit. So I do that sometimes, when I'm trying to find like a good strategy. This one only has a 7% chance of happening, but you get a 25.5 to 1 return on it. So probability versus reward risk is what it kind of is all about, Tyler. And we present that here. We also present like a distribution percentage, which is you want to trade the highest distribution percentage. That again is picking out the short strangle, and then high forecast percentage. So that's how I like to look at some trades often. Is how is this type of a strategy looking? Now this is a short strangle. I never trade short naked anything. So I buy what I do with a short strangle is I buy a very wide long strangle against it. So I'm protected on units, but that happens to be the best one right now. And that's what we kind of did. We looked at we looked at pop, so you want, if you have a very high probability of profit, you can handle a high reward to risk. See, this reward to risk is higher, and you have a lower probability, so you wouldn't want to do that. And this one, this short strangle actually looks the best from a risk reward to a probability of profit. And especially compared to like this one has more risk, right, in the TLT. But so anyway, what I'm pointing out is this is a very powerful way to look at all your strategies, and this is kind of like the final answer. We do it also for curated strategies. It does take a minute to go and look because it's doing all those things, but we provide curated strategies to get you started. But then you could go do what I've just talked about. Find a good back test that you want, see if it optimizes well, see if you have a decent p-value. If not, then you got to go to the next one. Mm-hmm. So so Tyler, I think that's a good show on going from a back test, optimizing it, going to the optimizer, finding good optimized values, ones that make sense. Maybe we have some in there that may or may not make sense, but one that makes sense are the better ones. And then what you do is you could put this right in your paper trading, and then look at the journal and see how you're doing. So there's it's a great workflow. It's a way to get up and going and test and learn and do all the things that you need to do to be a good trader.
Yeah, that was great overview, Matt. There's a lot going on here, and we've built some very powerful tools, and definitely knowing how to use them is part of making them powerful. So I'd recommend also asking Auto AIs. It's built into the dashboard now. It's in the top right corner. So it's especially helpful if you have any questions about our indicators. In this sort of workflow, you're looking at things like vol of vol. Like what does that mean, right? Our description is only one sentence. So what Auto will do is you can ask it about indicators. You can ask it about p-values, about the process, and things like that. And it's super helpful for this workflow.
Absolutely. Yeah, nice job, Tyler, on the dashboard, and thanks for the presentation here. I think it's going to help some people. We'll make this available on the dashboard, so you could go. We have a very hefty learning area. So we have a community, we have a blog, we have a university, and all these webinars are here. You could also ask Otto, about certain things, right? You could ask it like, what is it like? Can you, any videos on that, right?
Yeah. We recently linked it up to the webinars. So those webinars that you see right there on the Learn tab, it knows which ones they are and what they're about. So it could be a very, very helpful learning resource. I mean, it's a lot to take in, so we're working on making it easier, and hopefully this new workflow makes it a little bit more streamlined.
Yeah, Otto's doing a great job. Look at it. It kind of went over what we just talked about. Start with the foundation strategy, browse existing backtest, create simple strategy, add intelligent indicators, and it's saying how to do that, p-values and all that. So Otto's doing well. Otto's replacing us, Tyler.
Slowly but surely.
Yeah, and then here are all the links, and they not only link it, they say where to go to see the certain thing. That's pretty cool.
Mm-hmm. Yeah, it's very cool. All right, nice show today, Matt. If you guys have any questions, you can ask Otto, or you can email us at support@orats.com. We also have a community tab. It's in the Learn tab of the beta dashboard, and you guys can go there and ask the community questions. That's generally where you go if you're looking for strategy ideas or just questions about strategies, because we're an RIA and we can't answer a lot of stuff. So go there, go to Otto, and then watch these shows. So thanks for another great show, Matt. And thank you, Trader, for hosting us. We'll be back again next week.
Thanks, Tyler.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.